think the market overall is overvalued?
Absolutely not. I mean, if I just told you that we were going to have low interest rates of 4% mortgages, you're going to have a 3% 30-year bond, you're going to have historical cash flows, historical cash on the sidelines, the strongest banking system we've seen in such a long, long time, unemployment so low. You put all that together and you would think we're going into a bull market. But it's just that we've been in this market now for 9 years and people think it's over. Certainly it is not, Kelly.
Yeah, they've been thinking it's over the whole way. One more sort of top-level question on this. We were just talking about IPOs and whether that's a sign of the top, because there are venture capital guys who are afraid if they wait a year, Neil, that the markets won't be open for these. Is that pessimism undue?
Well, I think you got to go back in time and look at the late 90s. And if you look at that time in the dot-com arena, they had pet.com. I don't know what that had to do with the internet, but they had a pet.com. They had a lot of companies that were coming public, raising $500, $600, $700 million, and they didn't even have a product. They didn't even have any revenues. What you're seeing with a Lyft and Uber, you're looking at, they have huge revenues. They just haven't been able to break into the profitability column. But they can, Kelly, if you think about it, if you use a $10 Uber to go someplace and they raise it to $13, are you going to quit using them? No. So essentially, they have a lot of pricing going forward. It's going to take years for them to get there.
So would you buy into that IPO, Neil?
No, I would not. Not okay. When you're losing $1 billion, $3 billion a year, I'd rather take that and buy something like Landstar or Restoration Hardware.
That's exactly right. So in the time we have left, tell me why Restoration Hardware is on your radar.
Well, Restoration Hardware is bucking the trend. If you know, everybody's getting rid of brick and mortar, and essentially you're looking at a company here that has a low price of sales, 0.9, so you're paying 90 cents for a dollar. They earn $9 in revenue. They earn $9, but essentially it's a destination now. So people are going there. Very little online revenues and sales, but people are going there because they're putting in high-end restaurants. They're doing things differently to bring customers in. And so when you look at a company making this kind of money and not paying a dividend, you can see what's going to happen maybe in the future.